Welcome to the Real Money Show, the number 18778 Silver, and the website guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia. Jerry, missed you last week.
I'm back.
Good to have you back.
Thank you.
And what a week to come back to. It's been absolutely crazy. So this week we want to, of course, address the Federal Reserve rate cut because we got our pivot. I think we can do a little victory lap on that one.
The pivot dance.
We got our pivot, but we also got something. We reached escape velocity on gold, and we want to talk about that. What is escape velocity? We'll also get into what the rate cuts mean. Is it good? Is it bad for markets? What does it mean for the gold and silver market? A little later in the show, what happens if there is a massive collapse? Is gold the only investment you need? We'll talk about that later on the show. And of course, we've got some people calling for, or entities calling for, a major bull cycle. We want to talk about that later in the show. But first, if you want to get involved in physical gold and silver, the number 18778 Silver, the website guildhallwealth.com. Our e-store is up. It is working. It is really good prices. You can set alerts for trying to get lower prices in the market if you can. And you go to Guildhall Precious Metals for that. If you want to own physical gold and silver in a registered account, fully allocated, fully segregated, you own it, no counterparty risk, ease of liquidity, you go to the website guildhallwealth.com and you can learn about that. Jerry, this week, gold hit, as we're recording the show here on Friday, gold's hit 26.22. We're reminiscing about the days when gold was $2,000 an ounce back in January. Silver hit 31.25. What did you make of the week, just in terms of movement in the price?
Definitely thought that this was going to be the case. Now, quite muddled this morning as on the back of some news from Bank of Japan. They didn't hike as expected. So we did get the move up in silver and gold. I think there's a lot more headwinds, much more tailwinds for precious metal to push and thrust this market over. I believe going to be the $2,700 mark very soon, very rapidly in gold. And as we know, Mr. Silver follows suit and loves to outperform gold, especially in these times. And we're seeing the outperformance right now. Silver's up about 30% on the year, and gold's up about 25%. That's the type of gains that our clients, that our silver and gold family are enjoying right now in the markets.
And certainly at this point in time, that's definitely beating inflation. Long term, it has been beating inflation as well. I found myself, as you know, listen to a lot of different podcasts, and I was listening to one on Soar Financial with Michael Oliver, and I realized halfway through that it was actually from a few weeks ago.
Okay.
Because as soon as I hear Michael Oliver, I'm like, oh great, let's tune into that. And it was very interesting because first of all, he called the 50 base point cut from the Fed. He predicted it. He basically said that there were underlying economic vulnerabilities, and he saw that the Fed would move in a response to the growing economic weakness rather than strength. And then he basically highlighted broader concerns about financial stability. So I thought that was really interesting. Just the fact that he completely nailed 50 basis point cut. He said, listen, this market is not as good as you think it is. And, it did make you question the credibility of the Fed, because he talked about in the sort of aftermath of a rate drop, the stock market's going to go up. What a time for the stock market to go up during an election, right?
Yeah.
And of course, I don't know if I didn't look. I got to be honest with our audience. I don't listen to his talking afterwards because I don't care what he has to say.
A lot about it.
He's going to say, well, we're data dependent, blah, blah, blah. But we're looking at their actions, not their words. You don't cut unless you're worried.
That's right. And that's exactly what we're seeing. I was watching Bloomberg News about 7 minutes before the rate cut happened, and the roundtable of expert pundits were all grouped together, all saying we are all in the 25 basis point camp because the Federal Reserve and all of its members never mentioned 50, never mentioned 75 like the Democratic senators. They all wanted and spoke about 25 basis points. That was what was expected. but we saw the 50-point cut. That is a signal that there is tremendous weakness. And we can't ignore the data that came out just prior, how many job revisions we saw in the U.S.
So we talked about it on the show at length.
And not to mention all of the other metrics that skewed in their favor to help these speeches to give them some sort of credibility, the Jay Powell credibility when he jumps on the stage. Now it's totally shot. He was bantering back and forth in that meeting that we don't listen to, but he was going back and forth.
Well, you were, I wasn't.
Not really.
Okay.
Not really, but he was trying to say that things were very good. But things are not very good if you're doing an emergency 50-point cut that the outsiders of the Federal Reserve called for. And he listened to the outsiders. So a 50-point cut we're getting, and there's a series of cuts coming up.
Look, when you cut rates, you're going to give a boost. Money gets cheap again. You're going to see a boost of economic activity. But there is no doubt you are throwing in the towel on inflation. This is the pivot. You're throwing the towel in on inflation. You're saying we want growth over protecting against inflation. It's quite hypocritical at the end of the day when they're the ones who are saying we have to fight inflation. You know, I agree with Peter Schiff. I think the fact that they did this is going to make 2024 look like the good old days, you know, when inflation was only in the low double digits with what could happen with the lowering of the rates here.
Right.
Now, there's no doubt it has sent gold and silver higher, that there is an underlying element that understands how this works. And people are saying, oh, so we're back to inflation. I need to protect myself. And you see gold and silver catching quite a bid. Now, Andrew Addison in Barron's, I believe, talks about this idea of gold reaching escape velocity. Can you tell us about this term, escape velocity? Because apparently we've reached it.
Very good article written by, Barron's Andrew Addison this week, and it came out on the Market Watch, a Dow Jones piece. He wrote that he turned bullish on gold back in 2022 when gold hit 1680. Now we're seeing a cyclical advance starting in last year. Gold broke through the 13-year resistance at 2100 back in March. And the daily charts are showing some amazing moves on the top side for gold. One specifically, two bull flags with quick advances followed by sideways movements, he points out. And the monthly chart highlights this 13-year base with weakening selling pressure, so much more thrust momentum now in the gold space. Now, and he marks this bull flag formation with quick advance movements before finally breaking forward and breaking out of this resistance. And he calls this peak the escape velocity. It's reached escape velocity. In financial markets, escape velocity refers to the point at which an asset like gold or silver breaks through a significant resistance level and begins to rise rapidly without being held back by previous barriers. It's a metaphor borrowed from physics, where escape velocity is a speed needed for an object to break free from a planet's gravitational pull. So his call is $3,000 gold. Because of this escape velocity, the cut that string of resistance for gold and silver. You cut it, you let gold loose, and once gold breaks above that $3,000 mark, this leaps and bounds. Because how many times this week has gold, or the past few months, has gold broken all-time highs? Double digits, and it's losing its punch. But once the silver starts to break higher and starts to break all-time highs, you're just going to see excitement over and over again in the market.
The number 18778 silver, the website guildhallwealth.com. Is that similar to completing the cup and handle?
This is it. Like, the escape velocity means that after you finally overcame that long-standing resistance of 2100 gold, this was not too long ago, gold has the momentum to rise significantly higher without facing the same level of selling pressure or even pullbacks that it had kept its price in check before. Now, once this point is reached, in which we have reached, this market will experience some sharp upward movements, and it will potentially lead to the upward movement in the trajectory for, Grady's cup and handle. It looks amazing. The chart is perfect, and it does lead gold into the $20,000 mark. So get positioned, get your gold position in your portfolios, whether it be a TFSA, great place for silver, or RSPs. You want to roll out and get into the metals market. You haven't missed the boat, but definitely ready for a great ride upwards.
Yeah, we've definitely gotten a big boost from the Federal Reserve here. It's good for gold and silver. Could be bad for the economy. It's something that we want to talk about in the next segment. Is lowering rates good or bad? We want to look at the reality check on that scenario. But in the meantime, look, Michael Oliver nailed that call. He also saw that we are in a velocity move as well, Jerry, in the gold and silver market. He believes gold could easily go to $8,000 over the next few years. And when you start to think about the gold-silver ratio, it starts to look really, really good for silver. We're talking 100, getting above 50, obviously, and moving into hundreds range, which is incredible opportunity for a lot of people. Something for you to definitely consider looking into. If you want to own physical gold and silver, the best way to do it is to actually own it yourself. And you can do that by just going to guildhallpreciousmetals.com, where you can buy it direct, take some home, follow the crawl, walk, run strategy. Get started, see how it looks, see how it feels, get comfy, because comfort breeds confidence. As well, you can hold it in your registered account. This is a really popular place to do it because people are looking for an alternative, a place where they can protect their wealth and take advantage of what's happening in the markets. Own it physically, outright. It's zero counterparty risk. You have direct ownership, fully allocated, fully segregated to you. And you can do that with Guildhall. We'll be there every step of the way. We are hands-on when it comes to our registered accounts. The number 18778-SILVER and the website guildhallwealth.com. Jerry, we want to talk about the rate cuts. We want to stay on this topic a little bit and just explore it a little bit more in terms of what it can mean to anybody who's in the market. Some people think, they've been waiting for this. They've been waiting for this, especially if you've had a variable mortgage in the United States. I'm sure this is going to follow for other countries as well, and Canada will start to continue to lower rates. The difference is they did a celebratory. They gave themselves a round of applause when they lowered the interest rates. Oh, by the way, did you hear about Mark Carney?
Yeah, isn't he jumping on board the liberal ship?
Yeah, but that he's trying to launch some sort of new massive fund, and he wants something like $40 billion from the federal government.
Well, there you go. I didn't know that.
Yeah, that was
not surprising.
That
from
was
Mark
the
Carney.
First reason for the meeting is trying to raise money from the federal government. Look it up. Look it up. You guys can look it up on your own. You'll see that that's probably the real reason that he entered the picture.
True central banker.
Yeah, true central banker. He's not there for you guys. He's not there for you guys. So, Jerry, some people will argue that a rate cut is great for the stock market. So why do they need to get into precious metals if the stock market's ready for a massive rally here? What's your take on that? Is the market going to rally, or is it a little bit more complicated?
It is complicated. It's a tale between two very, either short-term versus long-term market reactions. Short-term, this was what the market wanted. This is what investors wanted. They needed some sort of a relief, and they're getting a little bit of a relief rally. We're seeing the rally happening in the S&P, hitting all-time highs as well. Things are moving in tandem. This is what was expected by me. It happens before. It happened in other markets globally. But we have to remember, you nailed on the head last segment when you mentioned inflation. We got into this entire mess when the U.S. and Canada and central banks around the world printed trillions of their currency. They literally cranked that thermostat of inflation to 40-year highs. Then they had to get to work. Well, work in quotations, get to work by raising interest rates.
Which we said that they would do until something broke. This was the whole pivot talk.
Things broke.
We thought it would happen inside of a year. I think it took 2.5 years to finally get it. But so maybe we were slightly off on the timing. But the pivot did happen. But is lowering interest rates then? I personally see it as a temporary Band-Aid. Do you see it that way? Because it also seems a little political in my mind that
too.
You didn't do it. You didn't wait for some sort of disaster. You're trying to be preemptive to that. And when has the Fed ever been preemptive about anything?
Never.
They're always reactive.
Very much so. Very, very political as well. But back to the currency, this is the design of obliterating.
Are you saying you didn't like my question, or
What?
no? Go on. What about the currency?
Well, just going back to it, this was supposed to be an inflationary fight. They're throwing in the towel on inflation, and it's continuing to the attack on the currency. If you're not going to be cutting or raising interest rates, and you're starting to cut, and you're going to bring in the helicopter money next, this is the integrity of the weakening of a currency is happening. The destruction of the currency is going to continue. Inflation is not going anywhere. And in this type of environment where you're having weakness and slowdown and economic slowdowns, plus inflation, this is a setup for stagflation. And we can go back to history. Where we saw this happening in the denarius, going back to the fall of Rome. It's the same playbook where we saw a debasement of the currency happening, where, the denarius used to be, almost pure, 95% pure, but then it plummeted to as low as 30%. The drastic debasement of the currency leads to inflation. It led to rampant inflation during that time. And what did it lead to? It led to the weak economic growth, social unrest, what we're seeing today, and a decline in trade, and ultimately a weakening military.
So I heard someone saying that basically the Federal Reserve's choosing stagflation.
Very dangerous thing to deal with.
So basically, we're going to be looking at no growth, higher inflation, but the stock market could go up. So that should be a little bit of comfort to people.
It shouldn't be. I brought up the situation before. We saw this in regions, specifically in Venezuela. We saw their currency similarly. Now, they didn't cut rates, but they were mismanaging the monetary affairs. There were tremendous capital controls, which is what we see in Canada as well. And during that time, the stock market, went up over 200,000%. Now, the hyperinflation of the currency happened, and what happened was people were not able to capitalize on that growth because they had to sell the stock into a currency that was literally worthless. So this is a situation. Do you want to ride out the stock market, bull run, what we're seeing, a knee-jerk reaction is what I'm saying, or do you want to roll out of this asset that is only denominated in a currency that is just being debased and destroyed? It's a very dangerous time to be in anything dollar-denominated, currency-denominated, paper-denominated. The place to be is in hard assets. We are in a hard asset super cycle, which we'll get into, but when the Bolivar became nearly worthless, the investors could not capitalize on this enormous gains in the stock market. It's an illusion. It's an illusion because you don't know what's going on with the currency underlying it. The currency is losing purchasing power by the day. And gold and silver, what we're seeing is gold's going up 30%, but it's really the loss of your purchasing power. You're losing that every single year.
Well, but gold's outpacing that.
And thankfully,
it's outpacing that.
Exactly.
It's up over 550% plus now in the last 20 years. Silver's not far behind. It's over 500% now too, because as gold's rising, silver's starting to play catch up. And that's what makes silver so appealing. But what's interesting about what you're talking about is, so now you're going to see potentially more volatility in the stock market. And we just talked about the gold market in the last segment becoming less volatile. And this week seems to sort of echo that, except for what happened right after the Fed dropped rates, because that was very interesting. We saw the market run up, then go down, and then recover right away. Right? You had all these people going out, like Mr. Slammy saying, "Oh, here it comes." and then, and you had people like Peter Schiff saying, "Oh, they're taking profit." And then all of a sudden, nope, we're not getting the slam at all. In actual fact, I was trying to put people into the market. I had 2 conversations and I was so panicked and stressed. They said, "How are you doing?" I said, "I'm really stressed.
Yeah.
I'm really stressed right now because, I don't know. It's just, there's been a lot going on in the market, But that was it. That was a blip. That was like a 3-hour blip in the market. Otherwise, the market isn't as volatile as it usually is. And I love this concept that gold is being supported now. But meanwhile, you're going to see more volatility in the stock market. So my point is, we talked about this last week on the show, this idea that people look towards gold and silver because they want to be free from counterparty risk and they want liquidity. So when you talk about Venezuela, well, you can't capitalize. You know, the stock market could go through the roof, but are you going to be able to get out? And what if it tanks? Are you going to be able to get out? Right? Most funds, settle at the end of day, those sorts of things, right? You could get you could have a stop on your account. Okay, I want it to stop out at $10. Okay, it triggers at $10, but you don't get out till 6.
That's right. It's happened.
So there's a lot more volatility in the market. There's a lot more counterparty risks, right? And that leads to another quick conversation, which is that we've been having here at the office a little bit over the last couple of days about advisors. I'll get to that in a minute. So I just want your opinion here, Jerry, on is gold and silver right now principally being purchased because people do not want that counterparty risk and they want that liquidity?
I think that is a major reason. Gold is that inflation, and it's an inflationary hedge, and it's also insurance for your portfolio. It's a reserve that's going to perform, and it performs when certain things fail. You know, when the stock market fails, when the currency starts to get devalued, when uncertainty starts to reign in, people flock to the safe haven, and it's a proven safe haven, a proven track record that goes back centuries. And there is no other asset class that offers that investors can grab a hold of. And lo and behold, you can actually take it in your hand. So you could put it in your RSPs, but there comes a point where you may not want it in there anymore. And you can take physical delivery of that in kind. So you can get that gold, which is global currency, by the way, and you can take that anywhere you'd like, whether it be Canada, US, Australia, England. It's a global currency. So it has many, many benefits. Someone who is trying to eliminate counterparty risks and these banking issues. You know how many banks went under this year and last year?
Or even, do you even know how safe your current bank is? How many people have mutual funds and know what's in their mutual funds? How many people do the work and say, how solvent is the bank that I currently have? Forget if the government bails them out. If the government bails them out, it's still only worse for you.
Yeah.
Right? You see people wanting to get involved in the gold and silver market because they want the independence from it all. But they get a lot of pushback sometimes from the other people that they work with. Why do you think it is that sometimes when someone's trying to make a change, they get pushback, right? Could be a relationship. You decide, I want to make a change. I want to cut out sugar, and everyone, I want to cut out drinking for a week, and everyone says, come on, have a drink. You want to make a change, and people push back. What is it that advisors are sometimes pushing back on when it's not an either or?
Really, I think their main case would be volatility, but
is this the gold's volatile?
Gold is a volatile.
It doesn't pay a dividend.
It's just spiel, right? It's a gold and silver spiel that it's very volatile, but the volatility is actually stemming from the currencies that are underlying every major asset.
Gold's only had 2 down years in the last 15 years in Canadian dollars, so that's not really volatile.
And these are the charts that we refer to, and we always have to question, why was this person who contacted Guildhall interested in gold and silver in the first place? There are many reasons, whether it be currency weakness and being able to get out. Liquidity is huge. When you need to get out and everyone's trying to head to the door at the same time in a market crash, you will not have that issue with gold. That's the reason why central banks need gold as a reserve for liquidity. And all we say is become your own central bank. You could do it if they're doing it, if the smart money is doing it, if the gold is being now put back into the monetary system, if gold is being introduced in Basel III reforms, investors are waking up and they're demanding gold ownership, which is the reason why people are leaving their financial planners that have done great over the last couple decades. And to go back after you ride through this wave of uncertainty, once things sort of normalize, whatever that looks like, and you want to go back to that financial planner, that is my plan. But right now, you do not want to be anywhere else. especially with the gains that are going to be had in gold and silver. I want people to grow their wealth at the same time of protecting their wealth. That's our goal here at Guildhall.
Sometimes, Jerry, liquidity isn't what it's all about. If you have something that's down 80% or down 50%, it's not very liquid. Right?
True.
So it's one thing to have liquidity. It's another thing that you want to make sure that it's not losing value. In other words, sometimes not having a liquidity can be a very good thing. And we're going to talk about that in the next segment. The number 18778-SILVER, the website guildhallwealth.com. If you want to own physical gold and silver, you give us a call. We're happy to talk about how to hold it in your portfolio, how to buy it for the first time and take delivery. Again, upcoming, we want to talk about a stable long-term asset. And later on in the show, who's predicting a super cycle in commodities. All that and more. The number 18778-SILVER, the website guildhallwealth.com. We took a moment during the break just to calm ourselves down a little bit. We were getting very hyped up. We're very excited about the market, and it really has been exciting to see how quickly people have made gains in the market. Oftentimes when you're buying gold and silver, there's, you got to wait till it rises above the cost of doing business because it's an asset. It's not a stock. And it's been really great to see how quickly people have overcome that, because there's been times in the past where it might have taken a year to overcome that cost. And then the other part of it is just also seeing how great it is that people who have held it long term, it just keeps getting better and better and better for them.
It certainly does.
So it's very exciting. But, we were talking about liquidity in the last segment, Jerry, and, sometimes, we also have natural fancy colored diamonds beyond also offering gold and silver. And, diamonds aren't liquid in the same way as gold and silver are. But when a crisis hits, sometimes liquidity can be a double-edged sword.
Very true.
We said, if it's low and, if you've lost money, something doesn't feel as liquid. It's like, yeah, you can sell at any time, but are you selling things that are down 50%, right?
No.
Now, colored diamonds in particular have had an incredible record of not having any volatility, and they're certainly not susceptible to panic selling in any way, and they really hold their value over time. So talk to us about that. How do you see the lack of volatility being more of a feature rather than a bug in terms of long-term wealth?
Well, this is it. It's all really about long-term wealth and generational wealth. When we're trying to combat hyperinflation and currency devaluation, it's very important to measure wealth in more stable assets. I'm once again reminded of places like Venezuela when they saw the currencies devalue. People were looking to literally, as prices were doubling every 12 hours. Imagine that for a moment. Every 12 hours, people were buying this and this item, maybe a ruler, a stapler, a clock, whatever it may be, just to preserve the purchasing power, to preserve the currency, just to buy something, because maybe I could sell that in the future. Why not put your wealth into assets that are beyond rare? At Guildhall, we specialize in natural fancy color diamond as investments, as a place to hold your wealth in beyond rare assets by obtaining the highest clarity, the best color, the highest size possible. We have done it. We have procured these diamonds. We understand what we're looking for in order to achieve success. And success is, combating the inflation and the loss of purchasing power, but at the same time acquiring something that is absolutely beautiful, something that you could pass on to your next generation, to your wife. I've been involved in a few diamond ring creations. We have a line called Wealth to Wear, and this is where you can actually enjoy this wealth asset and put it onto your loved one's finger. I was involved in a few creations, and let me tell you, Jeremy, it was one of the most satisfying experiences for me. I was a broker of it, but I actually enjoyed it. I actually fell in love with the ring myself. And, it was a builder's wife that received the ring, and she wears it to this day. And she was able to go to the different galleries, and nothing shines. Nothing is as scintillating as a Guildhall diamond, because that clarity, it's unmatched.
Yeah, not only that, but we have a custom designer He's incredible. He's worked for Tiffany's. He's worked for major diamond jeweler retailers, but you're not paying retail. You know, we have a ring, for example, that a similar quality diamond and probably better, I hate to say it, probably better quality diamonds in the setting at a major jewelry store that has, you know, Robin Eggs blue boxes is selling for over $30,000 pre-tax. And we have the same ones for around $20,000 with tax. So, you know, it does pay sometimes to also go wholesale. But talk to us about pricing on the diamonds, Jerry. How have they been performing over the years? What can they expect over the long term, generationally? You know, what's in it for them on a natural fancy color diamond long term?
Well, besides the rarity and, you know, the closing of mines that were responsible for the procurement or birth of rare pink diamonds, the mines are closed, the prices are firm and stable. But now we're entering into a phase of, you name it, it's called helicopter money. And over the course of the last, you know, decade and a half, diamond prices have been on the rise every time that there is stimulus. Color diamonds perform during these times of ultra high, ultra loose monetary policies, ultra high money printing. That is, when you add liquidity to the markets, which is what's coming up. These color diamonds, a Guildhall color diamond performs. We will see gains, but that's not really the point. What's happening is again, going back to the currency. You know, my perspective has always been on the currency. I'm a currency trader by trade, and I view everything in light of that currency, because what is the asset worth and what currency is it resting upon? If that currency is destroyed, you might as well get out of that leaky boat and into an asset that generational wealth builders have used. And we look at, you know, wealthy families. They've not really done it with, you know, the stocks. They've used assets like land, gold, natural fancy colored diamonds on crowns, you name it. This is real wealth, beautiful wealth that we can enjoy, and we're so proud to be able to offer this as a diversifier for your portfolio, because we have entered in, and we'll talk about that, commodity super cycle, and it's just going to lend into your portfolio quite beautifully, a great diversifier, and you'll enjoy it.
And, you know, you don't get that from lab-grown diamonds. You know, they're producing those at a massive rate because they think they can make money, but it's like it's like corn during the run up to the Dust Bowls. They just think that they can make more money at it, so they're producing more in a market that was already, you know, white diamonds were never particularly rare. They're a luxury item, yes, but you could go anywhere and buy the exact same diamond anywhere.
That's right.
Right? So they're luxury items, yes, but not necessarily a rarity. And when you create one out of thin air, you're making it even worth less than that. By the way, you know, they bought New York using beads. That's right. Yeah. And obviously once those could be created very quickly, those had no value anymore. So this is about having something natural, having something rare, something that takes millions of years to create and is unmistakably special. Mm-hmm. And when you look at these diamonds in person, you can't help but feel that way, especially when you're looking for one for yourself. It's always a beautiful thing to watch how the diamond picks you.
That's right.
It's a really interesting market to be a part of. Give us a call if you want to learn a little bit more about the market, or even set up a time to take a look at some of the diamonds available. The number, 1-877-8-SILVER. The website, guildhallwealth.com. Coming up, super cycle in commodities. Who's calling that, and where can that take gold and silver in the future? The number, 1-877-8-SILVER. The website, guildhallwealth.com. This is really a critical point in the market. We're seeing really big gains in gold and silver. Some people might think, Jerry, that, well, I should probably not get involved in the market. It's had a pretty good run in the last year or two. Have we hit the peak in gold and silver? Should people be taking profits right now and calling it a day? What are your thoughts?
Definitely hold on to the metals market. I mean, life is life. Expenses are on the rise. You know, Bank of Canada just signaled that inflation, or, you know, inflation's at 2%, that it's going down, ladies and gentlemen, that we have nothing to worry about here in Canada. But the Ipsos poll shows that Canadians are struggling to afford food, and we have to make all these cuts. But the Bank of Canada is saying, nope, we're achieving our targets. This is not the time to get out of gold and silver. You want to hold on, because what is coming up is going to be a wealth game changer for you, your family, and generations to come for your family. And it all had to do with, the big pivot that we saw this week and where we're going from here on in.
Are you expecting the Fed to keep dropping rates from here?
It is actually considered that we're going to see further rate cuts. This is the beginning of a rate cut cycle. We talked about commodity super cycle a little bit. This is a super cycle happening with Federal Reserve cuts. Just today, the Bank of America Global Research Team has uniquely increased its forecast for Federal Reserve rate cuts in 2024, predicting a 75 basis point reduction in Q4. So coming up, a 75-point slam dunk that's going to rock the markets. And mind you, this is happening while the big zombie central bank postponed their hike. They were supposed to hike, like the Bloomberg pundits were talking about 25 basis points. They were predicting Bank of Japan to hike rates today. This morning, we're recording on a Friday. So they saved the world by not hiking interest rates, because we know the Bank of Japan, the zombie bank, it was responsible for the derivatives bubble that we're seeing, the trillions and quadrillions. So this is going to continue. And I think, going back to your question, this is not where you want to be in the stock markets and things like that, dollar denominated. You're going to want to be in ounces.
Well, you'd certainly want to diversify, and it's still a good time to be doing that. We also are seeing concepts of a super cycle in commodities. Tell us about who's calling for that. I was watching a video just this morning of another gentleman who was calling for that. Let me just pull up who I forget that was. Tom Luongo.
Yes,
he was saying we're in a commodity super cycle. But he's not the only one.
No. We had Goldman Sachs talk about it before. JP Morgan talked about commodity super cycle. Now it's our friends at Saxo Bank, Ole Hansen. He does a great job over there. Now he talked about the commodities in particular, energy, industrial metals, precious metals, all rallying, and it's in response to now lower funding costs. You cut interest rates, you're making it easier for these companies to get going. You want to get digging. We need these resources. We need these metals out of the ground as fast as possible. The demand is high.
But it takes years to get it from the ground
to
actual market. You can't just crank up a new mine.
No, you can't. And supplies and quality supplies are dwindling, which is the further reason for a crack up boom happening in precious metals and commodities. The commodity super cycle is all following suit. Gold reaching high and breaking through 26. But he likes silver as well. Silver's outperforming gold according to his report. Year-to-date gains 30%, benefiting from rising gold price. He says industrial metal strength and softer dollar. With a weaker dollar, because when you're cutting interest rates, you're weakening that dollar. Gold and silver and these industrial metals are now becoming more inversely correlated to that U.S. dollar.
Let's talk a little bit about where we could see gold go. I've seen numbers $3,500 even this year. Do you think that given that we've gone from $2,000 an ounce to $2,600 in 9 months, do you think that we could be seeing $3,000 in our sights before year's end?
We certainly can.
Or stop me if you think I'm getting over my skis on this. Am I getting caught up in it? I don't want to sound like someone getting completely caught up in the market, but is it a possibility?
It's definitely a possibility. When we're now entering into a stagflationary cycle, which is what we saw in the 70s, we have to look to see what happened during that decade with the first bull cycle in precious metals. During that decade, for the beginning in 1970, gold started to rise and rose higher nearly every day for 4 years in the 1970s. Imagine that. Every single day, almost every single day, gold is up. Well, up how much, Jeremy? Do we want $5 a day? Well, let's say almost every day, 365 days a year. Well, that would put gold at $1,500 for that year. But if gold went up a whopping $15 per day, multiplied by 365 days per year, that's $4,000, Jeremy. That's $4,500 US for that 1 year.
Could you imagine the price of gold to Bitcoin at that point? They wouldn't be they wouldn't be laughing so much at the gold market. I put on our X feed last night because, again, you know, it's funny. The market going up should be a celebratory time. It's actually quite stressful. But Garrett Goggin put out that gold now versus the 70s. He said, from where it is today, he said only another 1,241% to go to match the gains that were made in the 70s. And it's funny, Michael Oliver talks about that same thing of how much it would have to go up. And you have to remember, this would be a massive takeaway for today. When you think about the debts in the 70s versus today, the debt to GDP for, you know, from the 70s today, it could be way bigger. But it doesn't have to do that in order for you to be successful at that. You know, if gold went to $3,000 an ounce at an 80-to-1 ratio, which is where we're sort of at with the gold silver ratio, you're looking at $37 silver. You know, that's a good gain to go from, you know, $25 to $37 inside of a year. And that just shows where you could go from there.
Yeah.
We're still not even at $50. So if you think that you've missed the party in some way, look at where the all-time high is on silver and start to make the economic decision and think about that, or speak to us. I have to say, one of the things people ask, well, what's different from you guys to the banks? And the biggest difference is we walk with you as a client from the very beginning to the very end. I was saying to someone, you know, even if you decide this isn't for you anymore, or you have another opportunity and you sell off your RSP, or you want to transfer to somewhere else, we still follow you and help you right to the end. We don't say, thank you, bye.
To the curb you go.
Yeah, because we understand we're helping people, and to fulfill the service is to go all the way.
Yes.
You know, but we're here to have soundboarding conversations, talk about the markets,
the trends,
these trends.
You know, we're talking about breaking all-time high, New Jersey scrapping taxes.
Yes, forgot that.
G7, you know, G7 is trying to launch their own banking system to rival the BRICS. The BRICS are backing their system up with gold. All of these trends, even Russia paying China in gold. We're going to be sharing this information to you just to try to, you know, shed some light. Maybe you want to reconsider selling your gold off. I had to do this week, by the way. Someone did decide to sell off while they were high. He's like, Jerry, I'm up 48% on my portfolio.
Selling for selling's sake.
Yeah, just selling for selling's sake.
Look, Jerry, you said it. We're here to give you information. And if you've missed a show, you can go to YouTube, you can go to Spotify, you can go to our Rumble channel, you can follow us on Telegram, follow us on X. There's lots of ways to see what we're up to, see what type of information we're bringing to the market. Jerry, that was fantastic. Thank you so much. Thanks to all our listeners. The number 18778 Silver, the website guildhallwealth.com. Can't wait to speak to you all here on The Real Money Show on 640 Toronto.